welcome to this explainer. If you really want to understand how the global economy is shifting right now, you kind of have to look past the flashy software startups and look at the actual physical infrastructure being built. And that brings us to a seriously fascinating case study. On August 6th, 2026, Siemens AG, this is a 179-year-old German industrial absolute giant, reported its strongest quarter in history. And get this, it wasn't despite the AI revolution, it was entirely driven by it. So we're going to dive into exactly how a company founded way back in the 1840s is literally laying the physical tracks for the future of artificial intelligence.
Just consider this staggering number for a second, 132 billion euros. That right there is Siemens' unprecedented order backlog. To really put that into perspective, they're currently sitting on a book-to-bill ratio of 1.34. So in simple terms, for every single euro of revenue they actually recognize, they're booking 1.34 euros in brand new orders. Demand is just massively outpacing supply right now. This isn't just some slight little uptick. We are talking about a violent, massive surge in demand for industrial technology.
Now, this definitely isn't happening by accident. CEO Roland Busch actually gives us the why behind these crazy numbers. He points out that their sharp focus on driving industrial AI is exactly what gives them a solid foundation for their success. In a persistently volatile geopolitical environment where so many companies are struggling to find their footing, Siemens is finding that their pivot into industrial AI is acting like an incredible shield. It's basically turned into a massive growth engine.
To really grasp this earnings report, we are breaking things down into 5 core parts today. First up, a record-breaking quarter. Second, the AI infrastructure boom. Third, rewarding the shareholders. Fourth, expanding in America. And finally, number 5, powering the AI future.
All right, let's jump right into section 1, a record-breaking quarter.
The top-line numbers here are simply historic. Group orders surged 14% year-over-year to a record 27.9 billion euros. At the exact same time, comparable revenue rose 8% to 20.8 billion euros. And what's cool is that growth was incredibly well-rounded across all regions. But honestly, you have to look at the 25% profit jump. Their industrial business profit hit a record 3.5 billion euros. When a company the size of Siemens increases profit by 25% in a single year, that is monumental. Plus, they achieved a massive 17.3% profit margin on that industrial business. So they aren't just selling more stuff, they are selling it much, much more profitably. Rounding out the sheer financial power of Q3, the bottom line metrics are incredibly strong. Free cash flow actually climbed by more than 40% to 4.1 billion euros. Net income grew to 2.27 billion euros, which pushed their earnings per share up by 36 cents to $3.14. So the absolute crucial point to take away here is that they are generating a historic mountain of cash, which kind of leads us to a mystery we need to solve. What exactly is the hidden engine driving all this cash generation?
That brings us to section 2, the AI infrastructure boom.
When we think of AI, we almost always think of software, right? But the cloud actually lives on the ground. AI requires massive, super energy-dense physical infrastructure just to process the data. And when you peel back the financial layers, it reveals that Siemens is the company actually building it. Consider this absolute mic drop statistic. 9 of the top 10 largest data center providers globally rely on Siemens. They are definitely no longer just some old-school manufacturing company. In just the first 9 months of fiscal 2026, they pulled in nearly 6 billion euros in data center orders alone. If you're building a hyperscale AI data center right now, chances are you are buying from Siemens. Looking across their core divisions, smart infrastructure is the absolute star of the show here. Orders are up an astounding 42% to 8 billion euros. And that is a direct result of those massive data center and semiconductor facility build-outs. You also see digital industries posting 10% revenue growth, which was heavily driven by a 15% bump in software and automation. And then there's mobility, their rail division, which posted 7.6 billion euros in orders with an exceptional 2.35 book-to-bill ratio. Like CEO Busch pointed out, the world is building more and more electronics factories, and every single one of them needs to be automated. Okay, moving right along to section 3, rewarding the shareholders. When a company lands a historic windfall like this, the very first question is usually, well, what are you going to do with all that cash? Siemens is making it extremely clear that they are directly rewarding the investors who believed in this strategic pivot. Because of this phenomenal third quarter, leadership stepped right up and confidently bumped their full-year expected earnings per share up to a range of $11.20 to $11.50. Furthermore, they committed to hitting the upper half of their 6% to 8% revenue growth target. They aren't coasting here, folks. They're hitting the gas. And they're really putting their money where their mouth is with some aggressive capital returns. They announced a massive €6 billion share buyback program that officially kicked off on July 1st, 2026, and it's slated to run for up to 5 years. This is a huge signal of confidence in their ongoing cash generation. And how did the market react? Well, shares absolutely surged 3.82%, hitting a 52-week high of $36.11 on the day of the report. The market is fully buying into this growth narrative.
Let's transition over to Section 4, Expanding in America. To actually fulfill a €132 billion backlog, you need factory floors. And on August 7th, literally just one day after their earnings call, Siemens announced a massive expansion in the United States. This translates to a combined $200 million physical investment. First up, a massive $185 million, 550,000 square foot facility in Pendergrass, Georgia. This specific location is totally dedicated to producing critical low-voltage electrical infrastructure just for the data center market. And remarkably, it will be 100% electrified right from its inception. Second, they're doing a $19 million expansion to their flagship switchgear factory in Grand Prairie, Texas. They are physically expanding their footprint to catch this massive wave of U.S. cloud computing demand. And of course, this corporate expansion translates directly to real human impact. These two facilities combined are expected to create more than 1,500 new American jobs. Hiring is going to start in late 2026 for the Texas facility and in 2027 for Georgia. That's going to span all sorts of roles, from engineering to fabrication and assembly. You know, Siemens has been a part of the American business landscape for over 140 years now, but this feels like a massive new chapter. Finally, we arrive at Section 5, Powering the AI Future. The biggest bottleneck to artificial intelligence right now actually isn't compute power. It's electrical power. AI data centers are just incredibly power hungry. So how exactly does Siemens plan to stay ahead of the curve and solve this immense energy challenge? Well, looking at their forward-looking timeline, a seriously pivotal moment arrives in mid-August. On August 14th, Siemens announced a highly strategic partnership with a company called Reinhausen to develop direct current power solutions specifically tailored for AI data centers.
What they're doing is industrializing something called a solid-state transformer. To demystify that a bit, what this highly specialized device does is take up to 36 kilovolts of alternating current straight from the grid and convert it into a galvanically isolated 800-volt direct current output. What does that mean in plain English? It provides the exact kind of direct, ultra-efficient power coupling that these hyper-demanding AI data centers desperately need to operate without, melting down the local power grid. Siemens is literally solving the AI power bottleneck at the hardware level.
And just briefly, I want to point out that while their engineers are innovating out on the factory floor, their executives are executing just as sharply in the boardroom. They've secured a binding resolution with German tax authorities, confirming that the planned spin-off of Siemens Healthineers will be distributed to shareholders completely tax-free. The vote for that is slated for February 2027. It's honestly a masterclass in corporate optimization, running perfectly parallel to all this massive industrial growth. So as we wrap up this explainer, I really want to leave you with a thought-provoking question. Is the industrial AI era just beginning? We are watching a 179-year-old giant post its strongest quarter in history, not by clinging to its past, but by becoming the very foundation of the future. With a €132 billion backlog and brand new 100% electrified factories being built to power the world's largest data centers, Siemens isn't just adapting to the AI revolution, they are the ones actually building the physical tracks for it. Thanks so much for joining me for this explainer. Keep your eyes on the physical infrastructure, because ultimately whoever controls the power controls the future of AI.